Like we've been saying, there is some good news for the economy. If you looked at the industrial output number coming in at 8.1, highest level in 11 months, and about a percentage or 150 basis points better than our poll. And of course, inflation numbers also coming 2.3 versus 3.3 month ago, below the Reserve Bank's already cut estimates. A. Prasanna, Chief Economist at ICICI Securities PD, joins us on the phone line. Good morning, Prasanna. There's a lot to react to for the debt markets. You have this inflation number and you have the governor's first presentation as well. What did you take from the governor's speech as a debt market player?
Well, honest to say that he spent more time talking to the press in one press conference than the previous governor did in the last 6 months. So definitely that's a positive. I mean, the main focus for us was about monetary policy. And I think, as one would have expected, because monetary policy is entrusted to MPC, I think he didn't want to comment too much on it. But of course, he did talk about inflation outlook being benign, which I guess kind of tells you the direction in which, or kind of tips his hand. So I think broadly what we are looking at is, I mean, if you look at the composition of MPC, definitely I think the number of hawks is coming down, and we would categorize the governor as a Dow, which means definitely there is, in terms of expectations of a change in stance, we now think that in the February policy itself, the stance will be changed back to neutral.
Okay, so what will you expect? I mean, after all, it's February policy. Is it, will the market today and in the days to come react only to a change in stance? Will they factor in cuts at any point? Will they factor in CRR cut? What is the composite expectation and therefore the bond yields that we should be prepared for?
Well, I would think, for most participants, the stance change would be the base case. And my sense is, I think even rate cut expectations will start forming. I mean, for ourselves, of course, we, at this point of time, we do not expect a rate cut. The composition of inflation is not so comforting. Also, we think that the MPC would prefer to wait and see how the Fed kind of, what indication or what guidance the Fed gives. And of course, oil prices continue to be volatile. So there are too many moving parts to take that call now. To answer your question, definitely, I'm sure the segment of market is moving towards rate cut expectation in February. CRR, I don't think is uppermost in the minds of market participants. We don't know what is the banking sector wants. Of course, the governor is going to meet the banking sector heads. Whether they are going to pitch for CRR, that is something which we have to wait and see.
This is a really tall list of expectations, right, for somebody who's just not even in his chair for the last 24 hours. I mean, a 25 basis points rate reduction is what people are expecting. You spoke about, changing the stance to neutral. There's some talk also of an immediate liquidity infusion, from the RBI. Realistically, do you think any of this could come through? I mean, you spoke about how you're not expecting a rate cut, but on the liquidity front, anything?
Yeah, so, just to back up a bit, I think the stance change part didn't originate from this governor, right? So to recall, in the post-policy press conference, the previous governor himself indicated that if upside risks don't materialize, there could be scope for a change. So obviously, it's like a continuation, I would say. On liquidity, liquidity has become a catch-all phrase, so maybe people who talk about liquidity deficit or issues with liquidity, maybe they should be asked to clarify what exactly they are talking about. In terms of primary liquidity, RBI has been doing quite a bit. In fact, it's been buying government bonds as if they're going out of fashion, frankly. So RBI is going to buy nearly some 75% of the government's net borrowing program. So if people are talking about credit spreads and availability of credit, then that's a separate issue. I'm not sure how much RBI can fix that.
Okay, but Prasanna, ultimately how much gets distilled in the price? 7.41 when we went to bed yesterday and didn't have, any of the CPI data at that time.
Yeah, so, obviously the direction is clearly for yields to come down. So, it's difficult to say how quickly the targets will be reached, but we still think that 7.25% of the 10-year yield is likely, I would say, within this month.
Okay. What about, just coming back to the IIP data, the biggest takeaway from a market standpoint perhaps is the fact that there's been really strong growth witnessed in infrastructure, in capital goods and consumer non-durables. How did you read into that? Is it something that is sustainable?
Yeah, so I mean, definitely it was a surprise, but then you have to remember it is before Diwali, so obviously there was some production ramp up. So we would probably wait for one more data point. Why we are saying that is also because if you look at the other high frequency data, I mean, there has been some slowdown in momentum. So at this point of time, I mean, this is not kind of going to make us change our view. The economy is anyway slowing in the second half of this financial year. But of course, this is an important metric to track in the sense that if growth really surprises on the upside, then that also should factor into the MPC's calculations. And then maybe that could probably, I mean, if they are also thinking about a rate action, maybe that could delay a potential rate action.
7 quarter, 7.2 you said. By when you think? Shortly?
I said 7.25. So you are moving
quarter,
it already. No, 7.25 before this month end.
All right. Thank you. You didn't say 7.2. Okay, we'll go with 7.25.
And on the infrastructure number, I mean, you spoke about it, but this 8.7%, what are you factoring in, say, over the next 2 to 3 months?
Yeah, so like I said, I mean, it's if you keep aside IIP for the time being, and if you look at other high frequency data, auto sales, for example, they have all slowed down. Of course, I think it's not just IIP, but even the latest PMI number was a positive surprise. So I mean, the sense is that anyway, we all expected the economy to slow down in the second half, mainly because of base effect. But also, starting from August, there has been a loss of momentum, and then you had all these NBFC-related issues which have cropped up. So my sense is that, I mean, we still see this as a one-off number. I mean, we are not convinced that, I mean, the momentum has picked up again. So we would need more evidence before we take that call.
Fair point. Prasanna, actually, there are two narratives on growth, and at the moment, one doesn't know what to believe. The high-frequency data, Sonia, that you track, as Prasanna is saying, auto numbers are showing slowdown. Yet the PMI number came strong. IIP number came strong, and the governor in his address in the Monetary Policy Committee said that capacities are running to full. We have the highest capacity utilization compared to the long-term average. Yeah. So there is that growth narrative, and then there is no credit to most of the sectors. We have to loosen. Yeah. Which is right? Is growth okay or is it not? We will have to wait for more data perhaps. Thank you very much for joining us, Prasanna, with your analysis of the numbers and the RBI speak.
So until we get more data on the macros, let's continue doing what we do best, talking about the micros. Manoj Muralidharan of Religare Securities joins in now. Hi Manoj, good morning. On the index first, what would the call be and what would your stock-specific trades be today?
Good morning, Sonia. Sonia, I guess today we have the expiry for Bank Nifty. So the buying, we are seeing good buying which is still going on in the Bank Nifty. Last couple of days, I guess a cumulative of around 16% has been added, and we believe the weighted average price for the distribution for Bank Nifty would be somewhere close to 27,200. So a better strategy intraday today you buy a 26,800 call option for today's expiry. You get it say by 40 to 50 rupees and hold on till end of the day. We are expecting a target of around 126 on that. For the Nifty, we believe the resistance might come somewhere close to 10,860 to 880. So we have a good 60-80 more points, I guess, after even if we have a gap of opening of 30 to 35 odd points. Stock specific, we like Marico. We would advocate buying that in the cash market as well. Let's say 370, you can buy that. We are expecting a target close to 390 on that. The stop loss should be 364. And from the banking sector, we would still go with an IndusInd Bank at this point of time. We can enter the trade today as well after the market opens. 1590 is what yesterday's close at, so try to buy around that price. The stop loss should be around 20 or 0.70, 1570 on the downtrend. We are expecting a distribution should be somewhere close to 1624 to 1630 should be the target on that.
Okay.